that very level at USO. Traded this morning now at 77.30, so that was a 130 point move or 135 cent point move, which was a crazy profitable sale, wasn't it? And that's a level we gave you in the classroom at 4 o'clock when we did this exercise. So that was quite exciting as well, wasn't it? Yeah. It's amazing what implied volatilities do for you, Mike. Amazing. And yet there it is. Classroom exercise, top edge, price action. Now, what if it opens gap up? Well, obviously, if you're trading futures, you would have traded through this area anyway. So you'd have been able to, the dealers would have been able to gamma scalp that by having long oil, not gamma scalp it, sorry, gamma hedge it by being long oil if it broke higher. It's happened on the gold here, of course, with the gold breaking this to hedge out any exposure. But obviously, this is a 1 day exposure in most cases. So you're looking at it being finished at the end of the day. And you can see it always seems to finish inside at the end of the day. Now, obviously, that takes us to a little interesting conversation we had about Max Payne this morning on oil. Remember the Max Payne? So we'll have a little discussion about what Max Payne is today. But you can see here that at 10 o'clock this morning, I was telling you that the Max Payne on oil is 71 to 72 and a quarter. So the dealers want to try and get oil below 72 quarters, right? So that's their kind of big objective is 72 and a quarter. What's oil trading at? 72 and a half at the moment. So they're not a million miles away from it. Not a million miles away from it at this stage, are they? Now, obviously, it changes over the day, so they might be able to adjust that position or whatever. But at this point, obviously, you just trade what you see it as it develops. To ask if anybody got pretty close to that $155 yen. We suggested selling $155 yen. Did anybody get close to it? It's traded 25 pip profit, so you've already got an easy profit out of it. Stops worst case at break even. I would have taken some money in that trade as well if you were in it, because obviously you started to lose a bit of value, but you regained the value, and you probably should have resold it again if you did take too many profits. And it has been drifting again in your favour from the 90s. So if anybody had listened to me, I told you to sell the 155 evens. So obviously on the data, it spiked to 155, dropped out. We lost a bit of value here, so we decided to take a bit of money off the 75s. Drifting higher, there was no value to resell it here, but there was some value to resell it here at the 154.90s. It's dropped back down again for 15 more ticks. Obviously, we've got some sort of cap buyer coming in here, which is a pain in the rump. See, there's a cap buyer coming in here just now, so it's causing the price to just jam up here. So good idea to bag some 15 tick profits. You see a bit of buy side divergence here, and there's obviously a bit of buy side divergence in this area here as well. So with those buy side divergences, the market you're looking at as a possible sell, of course, is your bond market. So you're going to be looking at that. The challenge you've got about selling the bond, of course, is that the curve agrees with the bond, but macro divergent. So a little sell on bonds would seem to make a bit of sense into those highest edges. And if you've taken it, well, of course, that means you've sold that highest edge, which was a price of at 21s, 22s. So in essence, you've ended up with this spread trade, haven't you? You're long the green line, which means that you're long yen, short dollar yen. So you were long the green line here, and you were long the green line here. And because of the fact that you're long the green line, you're now selling the bond against it. So you actually do have these two lines should be a positive correlation at this point. So we've obviously got a spread here rather than a piece of the one side. We've obviously got a spread play, so we should have a very, very safe trade here. So we can put our stops at break even in bonds. We can put our stops at break even on the dollar, and we're not going to lose any money anywhere.